Hey, what's going on, traders? Happy Friday. I wanted to make this very ground level video for what is investing and trading. I've been posting a lot of videos lately, and a few of you have been reaching out to me and saying, what does all of this mean? So I wanted to make just a very basic video at a very ground level, like I said, just to get you all introduced to what I'm talking about, what's going on, the certain lingo that you might hear me saying, and hopefully this helps you grow as a trader and get started in this world that we live in with the crazy financial markets. So here we are, the fundamentals of trading and investing by yours truly. What I want to focus on in this video is primarily the strategies that are involved when it comes to trading and investing, and how there's a lot of moving parts and there's a lot of certain ways that you can kind of take your trading, and it can be very specific to what you like as a trader and what you're comfortable with. So don't think that it's just a one path type of approach. There's not. There is numerous strategies out there, and you can kind of pick and choose what suits you as a trader. But at a ground level, like I said, there's mainly three types of trading or investing. So swing trading. This is a style of trading that attempts to capture short-term to mid-term gains in a certain asset. And if you go back in my videos, the first 4 videos that I've posted where I'm looking for plays for the next week or month, that is swing trading. I'm looking to buy something now, and in a few weeks to a few months flip it for a profit at that point, because I project that it's going to grow in the next certain weeks or months. That is swing trading. Don't get swing trading confused with investing. Investing, here at the bottom, I'll just jump to it. This is a very long-term strategy, a long-term mindset. It's picking a stock that you truly love and believe in, or maybe it's like a bank stock that pays great dividends out, whatever your strategy, because there's strategies within these little levels of strategies. But investing is basically staying in a stock or staying in a certain asset class or asset for very long periods of time, 5 to 10 years, perhaps even longer. This is the epitome of what it means to hodl and hold forever. Now, day trading, and I moved my camera to the top right because I was covering some of the words, but day trading is what I primarily focus on as a trader. This is what I'm more comfortable with. This is what I've studied the most out of all of these. To summarize day trading in a quick 2 sentences, perhaps even 1 sentence, it's buying and selling a stock in the same day. That's it. And it can even be broken down, not even to the same day level. It can be in the same 10 minutes, same hour, same few seconds. It kind of depends on what your strategy is as a day trader. Like I said, there is strategies built within these. I'm not going to go too in detail on them. I will make videos in the future discussing, the finer details of what's going on within these. So stay on the lookout for those. But let's move on to the next slide, which is the 2 primary foundations that you have, regardless if you are a trader or if you are a investor. These 2 foundations kind of build on what you already know and the strategy that you're going to take going forward. So there's 2 primary ones, and pretty much 2 of the only ones. One is technical analysis. Technical analysis is understanding what the chart is telling you based off the indicators that you have in place to kind of determine where price action will go in the next months or weeks or days. Technical analysis, in my personal opinion, is mostly used by traders, swing traders, and day traders. Now you may see here, and I don't know if I've brought these up in my videos, but just as a heads up, these down here, these bullet points down here are terms that you'll hear me say, as well as indicators that you'll hear me say that I primarily use as a trader to determine what I'm going to do. So we have the MACD, we have the VWAP, moving averages, support and resistance levels, and volume. All of these kind of align with what technical analysis is, and I will make videos on what the indicators are and what I primarily use and what I'm comfortable with. There is a lot of indicators that you can use. You do not have to use these whatsoever, but this is what I'm comfortable with. And if I'm being transparent and what I've seen, this is what a lot of traders use. But like I said, you can pick and choose and whatever you're comfortable with in terms of indicators in technical analysis, is all dependent on how you want to go about trading. Now, fundamental analysis is a little bit more old school. This is knowing the ins and out of the company that you're planning to. I primarily associate fundamental analysis with investing, long-term holding, 5 to 10 years, because you're looking into the overall health of the company. You're diving into their financial statements, you're listening to earnings call, you're knowing everything that's going on within the company to determine if it's going to be a profitable asset that you want to keep, in your portfolio or not. If I'm being completely transparent, my fundamental analysis lacks a little bit. I primarily pride myself as a technical analysis trader. I do want to grow my fundamental analysis portion or my skill set in fundamental analysis, and I'm hoping to bring you all along, on that journey, because it is crucial. And if you're going to be a trader or an investor in today's day and age, I think you need to have a little bit of both going on. You need to have a good understanding of what technical analysis is, and you at least need to have a general understanding of what's going on fundamentally. Okay, so I've had to move my camera down to the left hand corner. I'm sorry, I'll probably end up in the top left at one point in this video. But let's move on to the next slide, because I feel like we've kind of covered everything in regards to technical analysis and fundamental analysis. You'll see my logo here, and you're probably wondering what's going on here. If you're new to the markets, you may not be familiar with what I'm about to say here, or you may not even know that it's a possibility. But there's multiple ways that you can make money in the stock market. And believe it or not, you can make money in the stock market if it goes down. Now, the reason I have my logo here is I'm representing the bulls. So there's two players in the stock market game. There are bulls and there are bears. The bulls want the overall market, and especially whatever you're trading or investing in, to go up. The bears, on the other hand, are saying, no, I don't think your pick or the market's going to go up due to whatever's going on in the macro environment, or whatever the case may be. Not that I want, they probably aren't, pessimists like this, but they are betting that the stock market will go down, and you can make money if it goes down. Now, this in itself requires a deeper conversation, especially when it comes to, being on the bears, the bears spectrum, or the bears end of the spectrum, and being a bear in the market and betting on the market going down. But to summarize it, if you are a bull, you are long a stock. If you are a bear, you are quote unquote short a stock. You are given shares by your broker with the promise that you will pay them back. When you are shorting something, you are making a promise that you'll pay back the amount that was given to you, not the value that was given to you. So if you're given 100 shares at $1, you have gained $100 towards your portfolio or your net worth, or whatever the case may be, however you want to phrase it. You have been given $100. But if you are shorting, they're not just yours. You need to pay them back. You need to pay back the quantity of shares that was given to you, regardless of the value that those shares carry at the time that you are paying back. So the thought process behind this is that if you're going to short, you're going to get 100 shares at $1, because in a month from now, you think that those 100 shares will drop in value by half, at least. I don't know. In that case, when you go to pay it back in a month, they are now worth 50 cents. Instead of paying back $100, you're paying back $50, and you keep the difference. So that is pretty much shorting in a nutshell. I feel like I don't have to go too much in detail with being a bull or being quote unquote long a stock, because that's just the scenario that I feel like everybody is accustomed to, which is you're buying something to sell it for more in the future. So let's move on to, I think this is the final slide that we have. Yeah, but wait, there's more. I don't want you to get overwhelmed. What I gave you, everything that was presented prior to the slide, was the very ground level of what trading and investing is and the moving parts that are kind of going along with it. But there is deeper strategies built into each of them, and you can kind of tailor it and develop your own style. And there are, you know, like I said, there's deeper strategies to it, which I do want to touch on. For example, these right here. So I would love to develop options, an option strategy. I'm familiar with options. I feel like I have the same sort of experience or knowledge with options as I do with shorts. I understand what's going on. I understand how they work. I just don't have a strategy myself in regards to options and shorting. So these two things are two strategies that I would love to develop myself, and hopefully, you know, bring you all along on that journey. Momentum and scalping mainly has to do with day trading, and this is very, very fast day trading, seconds to minutes day trading. I'm familiar with this. I can make videos on this and touch on this because I feel like this is where my expertise kind of lies. There's reversal trading. So if you are seeing a significant level of resistance or support, and you're kind of betting on it's going to bounce, or it has bounced there before, or this moving average has held support, or anything like that in terms of indicators and knowing when a certain stock might either go up or down at a certain point and have this like inflection point, that is reversal trading. And then there's dividend investing, which I don't know anything about. I know that companies pay dividends to shareholders if you hold, you know, shares of their company for a certain period of time. They'll pay you for just holding their shares. A lot of people who are in the retirement phase of their life tend to do this because it's a passive income source that can be built on, and you can make a pretty decent living in a decent chunk of change by dividend investing. It's just not where I'm at right now in my trading career or investing career, so I'm not really focused on it. All right, traders, well, that is the end of this video. I hope this gave you a good foundation to build on and just give you a general understanding of what's going on when I'm talking and when I'm going through things in my videos. I know it can get pretty confusing, but with what I provided with you today, I think you should have a good base to at least get started and you know, doing your due diligence on your own and researching, you know, whatever you're not 100% clear of. If the information I presented in this video was helpful in any way, please leave a like. It helps out a lot. Check out my Twitch channel. I'm still trying to get people to follow me over there. Subscribe to my YouTube channel, and if you want to have a conversation about anything I discussed, or maybe I missed something, comment down below. I'm always willing to have a conversation. But happy Friday, guys. Enjoy your weekend, and I'll see y'all next week.